Hello everybody, welcome once again. Weekly wrap of the currency markets brought to you by forexlivetoday.com. Today is Saturday 5th of November 2011. Very interesting week, especially if you're a bit of a tragic like me. Really interested in the politics side of things as well as the trading side. Lots and lots to keep our attention. It's weeks like this when I really love my job. Okay, let's look at some charts while we talk about all the things that's happened this week, and we've got lots of setups just ready and waiting for us next week as well. Alright, so let's start with the S&P 500. So the week started out bearish for risk trends. Of course, on the news that Mr. Papandreou, the Greek Prime Minister, has decided that he would like a referendum after the EU summit, after all that work getting to an agreement of further measures to help them out. He has decided that the Greek people need to have a say in whether these austerity measures are going to be implemented or not. What this means is effectively Greece would have been voting on whether they remain in the euro or not. However, as the week went on, this seemed to change and culminated on Friday with Mr. Papandreou getting a vote of confidence. So it looks like he will continue in the job. No snap elections, and it looks like the referendum is off in any case. So they will be working now to implement those austerity measures and have them in by mid-December. So that's basically the story of the week about Greece. Now, all of these headlines coming out, this headline, that headline, just caused massive volatility in the markets, but no real reversal, although we did have weakness early on in the week. If we look closely at the S&P 500, you could argue, however, all it was a reversal to backtest the previous breakout before continuation. Now, technically, we're in, a bullish rally. There's no doubt. We've broken out of a range, we've backtested, and we've continued. This is bullish. However, as everyone keeps telling us, and as I do also agree, the economic situation in Europe and also in the US is not good. Now, all this talk about Greece, the focus has shifted a little bit away from Italy, but Italy is what I am watching more closely due to the fact that Italy's 10-year bond yields are now over 6%, and 7% is the threshold where other countries have had to get bailouts. So I recommend everybody keeps a very close eye on the Italian bond yields, remembering the Italian economy is much bigger than Greece. There's no money to bail out Italy, basically, so that will cause mayhem if Italy really get into more trouble. So I really strongly urge everybody to keep a very close eye on the Italian 10-year bond yields. If they get over 7%, cut your risk. Okay. So if we shift focus now to the euro, you can see the effect there that the announcement of the referendum had on the price early on in the week. And if we get our fib tool, draw our fib lines, you can see it retraced 50% of this bullish move and has since moved back up. Now, healthy retracement back to the 50% fib level. Now the next key levels, I guess, for the euro will be this resistance here, which is also 23.6 fib level, and then making a new high, hitting this resistance here. So with all of the possibilities of shock announcements, euro probably a little riskier than some of the other pairs at the moment, especially if you're looking for anything longer than a day trade. I did trade the euro a couple of times last week, but literally holding those trades for 2 hours, something like that. Cable is a little more stable. You can see the W shape, which I've mentioned a couple of weeks ago. So it was a nice pattern, and it has really moved up. But as you can see, if you look at the full move down, the move up stalled out at the 61.8 perfectly. Also, we've got a 200-day moving average there, so strong resistance. Coincidence that it happened at the same time as the news of the possible referendum, which obviously has now been scrapped. Having said that, technicals and fundamentals often do align like that. It's just the way it works. So really strong move up. We have a bit of a perhaps wave 1 here, wave 2, wave 3, wave 4. So we could be looking on a fifth wave of our bullish run. Again, you'll be looking for a break of this resistance for possible long sides, or if it stalls out here, you could look to the downside. Now, another pair that I am interested in trading at the moment is the Australian dollar. Now, I've given a couple of bullish arguments for the euro and the pound. However, do we really have reasons to buy the euro? Do we really have reasons to buy the pound? The only reason that they're moving up is due to a remarkable weakness of the US dollar. Now, if we look to the Australian dollar, however, we can see a much stronger economy. We can see something that is virtually unaffected by the whole financial crisis. Obviously, in terms of domestic, obviously has peripheral indications causing this. But what I'm trying to say is that the yield of the Australian dollar, the interest rates, although having been cut back last week by 0.25%, are still the strongest of all of the major currencies. After this strong sell-off, we've had a very sharp V reversal, and it stalled out right here perfectly at its resistance as well. So these technical levels have really been playing out nicely. Now it's dropped back. Let's draw a fib because it's dropped back much less than some of the others. So it only dropped back to the 38.2 before continuing. Now, what you want to see here is a break of this resistance here, and then looking for new highs here. Now, why do I think this one's a little better for the bullish argument than perhaps the euro or the pound? Well, if we go to a shorter time frame, and this is the hourly, you can see the move down. Remember, this is coming on the back of a really strong move up when everything was overbought. We needed some sort of retracement to unwind some of that overbought territory. So we've had a sell-off. We've formed a shoulder, head, and a shoulder, and we have a nice neckline which coincides with a fib level. So I will be looking very closely for a break of this to the upside for a long. Out of the three, this is definitely my favorite. Having said that, leaving the major currencies just for a moment to skip across and have a look at the New Zealand dollar, the Kiwi. You can see here it hasn't quite had the same strength in its reversal. Pretty good, but it has come off a lot further from the highs. So depending on your risk or how the S&P 500 performs early on in the week, if you're looking to play risk, Aussie looking good for a long. However, if risk aversion kicks in, perhaps the Kiwi dollar is looking the better one for a short. You've got 200-day moving average here. So although I'm not really looking to enter this early next week, but you might like to have a look. Okay, back to the majors and dollar yen. Very interested in this one at the moment. Extremely interested. Okay, so finally we had the intervention. You can see it here on Monday after those weeks of talk. finally, when the price hit 75.5, I guess they had drawn that line in the sand there. So my 76.30 was not too far off, but they did allow it to drop before moving up. Now, in previous weeks, I have been trading this to the long side, as you know, due to the fact of this intervention was coming. The floor had been set; it was just a matter of when they were going to come. They've come, and immediately it has started to retrace. This is due to the Japanese yen being a much better safe haven than the US dollar. The US dollar is unloved. If you've been watching the euro crisis and then watching the euro and sat in amazement at how strong the euro has remained, it's not because the euro is strong, it's not because anyone has any faith in the euro, it's because the US dollar is so weak. So much stimulus out of the US has weakened that currency just to these levels. So what are we looking for here? We're looking for this sharp intervention move to be retraced back towards this 76.30 level. A break of this former resistance, which is now acting as support. If this breaks to the downside, I'm in, and I'll be looking for 76.30 as my target. It may not break this support here. It may continue up. I don't think that is what will happen, but it could. So, this is why we wait for confirmation. You can't just go in now. Have to wait for this former resistance, new support to break to the downside. But I think there's a good chance that it will. So, Aussie dollar, I'm keen. Looking to trade this one. Looking to trade dollar yen early in the week as well. And dollar Swiss. I actually missed out on a trade. I took a trade and was stopped out pretty quickly in dollar Swiss. You can see on, I think it was Tuesday here, we had our break back up above this resistance at the moment, but it immediately retraced back below. So I had my stop quite tight. I think it was only lost 30 pips or something like that. I know a lot of people in volatile markets like to use wider stops. I don't really agree with that. I play the other way, where in volatile markets, I trade with tighter stops. So I may get kicked out more often, but I'm limiting my risk much more. So as long as I've got a good risk reward on the trade, anything from 1-to-1 or to 2-to-1, anything above 1-to-1 really, I'm happy. So once again, we have another head and shoulders on our chart here. So we've got the top of the shoulder here, and you would have your neckline kind of here. So you've got two ways to play this. Again, I'll be looking, if it breaks above this, to play the long side, and if it can come down here, make a new low, break this neckline, then we could have a reversal on the cards. So yes, let's see how it plays out. Once again, the weakness of the US dollar could come into play here. So you could see this dropping. So there's lots out there for next week. I hope I haven't forgotten something. I may have, but oh yes, I have, obviously. Here it is. Okay, Euro Pound. There's something for everyone at the moment in the market. Now, whatever style of trader you are, there is really technical setups. There's head and shoulders everywhere. If you follow Elliott Wave, there's some nice counts out there, but I don't really go into Elliott Wave in these videos because a lot of people don't follow it, so it's a bit of a waste of time. But I do follow it. But this one is just straight range. So you've got a level of resistance here at 88.20. You've got a level of support here at 85.35. It's not far away. You could look early on Monday and look to trade this to the long side with your stop below this level. You could wait for it to retest this level. However, it kind of has already tested it. So if you're not in already, you can either let it go, or you do have a good risk reward. Remember, it's all about risk reward. So your reward here is a potential 85, let's call it 86, so 220 pips to the upside where you would only have to risk, say, maximum 75 pips. So when you're looking for risk reward, you don't have to wait for it to magically touch this line and get these entries pip perfect. Of course, that's the ideal, but if you've got the risk reward, it's there for you. Okay, so I think that's all. Let's just quickly recap. S&P 500, even though we have bearish fundamentals in the market, remember what I said about those Italian 10-year bonds. Please keep an eye on those. If they get above 7%, get your risk trades off. Risk will be off. These markets will start to get hammered. But at the moment, it's not happening. We've got our bullish move, we've got a retrace back to test the breakout, and we've moved on again. If we can break this high going up for new highs, this resistance up here is the next target. Euro dollar, obviously weaker, potential head and shoulders, been hammered by talk of referendum, rate cut, but overall holding up quite well. Pound, again, holding up nicely, forming a higher low again, potential to move higher. Keep your eye on these fib levels. Once again, see how it's played perfectly to this 61.8. Very influential fib level. Aussie dollar, looking to trade this to the long side. If we start, why are we trading to the long side? Here's our daily. Strong move up. Retest of the 38, retrace to the 38.2. Remember, this is on the back of a rate cut as well. So once market digests this, could continue on. So we've got our trend heading up in the longer term chart, and down to the hourly on the retrace, touched the 38.2, also formed head and shoulders, a break of the neckline, and that's your entry. Dollar yen, I'm looking to trade this to the downside on a break of this support here. Potential for both ways on dollar Swiss, break of support, break of resistance, here, and a continuation of our trend, break of this neckline here, a reversal pattern. Euro pound, trade the range. Lots and lots to keep everybody busy next week. I hope you make some money. Good luck, and I'll speak to you all next week.